Hi, this is Optimus Futures, and we're back with our weekly roundup of key futures markets for our viewers. For this week, we'll be analyzing the markets as they closed on the 30th of November, 2018, and we will be starting off with the S&P 500 E-mini futures market as usual. So this market, if you look closely here, has just been mostly volatile in the past several weeks over here. Of course, we have the ceiling here just above the 2600 level at this area of support and resistance, as well as the 2600 level as well, just going right around here. And down here, we of course have the market finding decent support just above the 2600 level last week. Of course, the 2600 level itself is a round number and is also the price level that price bounced off very precisely the last time that was here. Last week, we actually found that the market found decent support just above that level. This was more close to where the market had actually closed when it had rebounded off the 2600 level before price actually took off towards the upside over here. So we did have a lot of bullish activity here that was mostly triggered out of positive developments on the U.S.-China trade deal front, where we had quite a few U.S. officials saying that the developments were definitely on the positive side, with a lot of talks going on with the Chinese officials and government bodies regarding reaching a mutually beneficial trade agreement, which is what the market here is anticipating and is mostly uncertain about as well for the most part. And that we do believe will be a very decisive force going forward towards the end of the year, and the more longer-term direction this market is potentially going to take. Of course, the impending talks between the country's president Donald Trump and his counterpart in China will definitely have a lot to say about the market direction going into December and basically the end of the year. But on a technical front, just looking at how the market actually pretty much opened underneath this major area of support and resistance that we drew here earlier, says a lot about the bullish momentum that's going on here. And so if we just get rid of all these extra arrows, so if we really just look at this area of horizontal support and resistance over here and how the market is actually gapped up and open close to this support and resistance level, it does tell us a lot about the bullish momentum here and how the buyers have just been strong over the past week or so. And so if we do see a move higher above this level over here, technically speaking, this level should then act as support and allow for more buying to come in, as well as for the market to continue to move higher and post newer higher price levels. But of course, a lot, like we said, will depend on the more geopolitical and macroeconomic developments that the country is going through with other major world economies, and of course the overall U.S. equity sector itself going into the last quarter earnings reports as well. We'll have a lot to say about where this market is going to be headed in the long term. But for now, looking at the price action itself, we don't see a lot of developments here in terms of a definite market sentiment or for the market to post a major move in one direction. We're looking at a mostly volatile market that is swinging and is basically range bound between some very, very important levels, majorly the 2600 and the area above the 2600 level. I meant the 2800 level and the area just above 2800 level. And down here, of course, we have the 2600 level. Of course, there are some other regions in the middle over here as well that are of some importance. And just given how weak the market is right now and how volatile it is right now, price may potentially also react and rebound off of these more interim and sort of midway periods of support and resistance as well. But we're basically looking at this entire action, or this box of consolidation over here, centered around the 2600 and the 2800 level. Okay, so the next market we're going to be looking at here is the light crude oil futures market. And this market, as expected, did really stall at the $1.50 price level. If you recall our analysis for this market from the prior week, we had talked about the importance of the $1.50 level, and even though we're looking at the market just hammering down here since it broke down underneath this rising support trend line, we did indicate that the market actually dropping into the $1.50 level is going to be of prime importance, and a hold up here was really shouldn't really come off as a surprise to a technical trader at all. And so no surprise at all for us either why the market actually sort of held at the $1.50 level and has opened up with a gap towards the upside and is currently trading at about the $53.75 mark. We're looking at this market from the perspective of some major global developments as well. Of course, the overall output across the world continues to grow for crude oil, led by, of course, the United States and the OPEC countries. But we do have a very, very important meeting coming up on December 6th, where a lot of OPEC producers are actually going to be meeting to decide if output needs to be cut down. We believe that that will be a very, very important stimulus going into this week, and which will potentially have a say on where the market will be headed, whether we'll see a rebound off of the $1.50 level or the market will come back to it, potentially break it towards the downside, and we'll see price levels even lower than $1.50 for the crude oil market. Besides that, there really isn't a whole lot to analyze here on a technical front. We're not seeing any major bullish activities going on here as of yet. On Thursday and Friday, we just saw the market sort of hold up at the $1.50 level, and we're just seeing that the market's actually opened with a gap towards the upside. But we do know that the market does have a tendency to fill these gaps, so we may actually see the market push right back down for another retest of the $1.50 level, at least in the early phases of this week, before we see any kind of major developments around the support capabilities being provided by the $1.50 price level over here. That, of course, remains to be seen, but from a technical perspective, we're not seeing any major bullish developments on this market just yet, and we're just looking at a very, very strong momentum and dominance here from the sellers that if just continues this week, we could potentially see the market actually dropping underneath the $1.50 level. However, we once again would like to divert your attention to the importance of the OPEC meeting going into this week, and we believe that it will have a lot to say about the more mid to longer term direction for this market going into the end of the year. Okay, so the next market we're going to be looking at here is the Euro currency futures market. And this is a very, very interesting market, even though we haven't seen a lot of movement on the chart here. At least we haven't seen any major vertical movement up or down on the chart here. And we're not seeing any clear direction or market sentiment being posted for this market. This is still a very interesting market to follow. And the reason for that is, if you recall our analysis for this market from the prior weeks and months, we've been talking about the importance of the 1.16 level that runs right around here, and the fact that we said that if the market was to move significantly away from the 1.16 level or sustain a move away from the 1.16 level, that we could actually see the market develop a trend and basically move in one direction for a sustained period of time. We did see all the developments for it. We saw the market actually breaking towards the downside. We saw the market pulling back and finding some really obvious and decent resistance off of the 1.16 level. And we saw a continuation here as well, where the sellers just started to pound price further towards the downside. However, we really haven't been able to build on any kind of momentum from that point on, and it's just been a really tight battle between the buyers and the sellers here. Importantly, the price level that we see is giving a lot of trouble to sellers here is the support zone that runs right around here, about just about at the 1.133 level. Of course, this is a proven area of support here in the past, and just continues to act as a very, very critical and an important area of support for this market. We did see a very solid push towards the downside underneath the level, but it really turned out to be a fake break of the level itself. And we saw buyers basically take price further up and back above the 1.133 level. And since then, price has just been in a no man's land. But interestingly, if you look at this market more holistically, all of this recent price action can actually be seen as tightening inside of a wedge pattern that we draw right around here, you can see that it's basically tightening up around the 1.133 level over here. So we have the 1.133 running horizontally pretty much between this entire price action over here, and we're seeing higher lows, and we're also seeing lower highs, which is usually a giveaway and a telltale sign that the market is winding up potentially into a chart pattern. Mostly it's going to be a wedge pattern, as in this case. So we're just seeing the market basically tighten up, and which implies that we could potentially be heading towards a breakout scenario, which this market could most definitely use, because it has been consolidating for quite a while now. And just going into the end of the year, it will be really nice for this market to post some kind of a momentum for a heads up and a more confident start to 2019. For now, though, we're just seeing the market consolidate and tighten further around the 1.133 level. As to whether the markets will potentially break towards the upside or the downside, we really wouldn't be able to, just given the price action that we're looking at right now. It should be really hard to tell where the market could be headed. It is an indecisive market, and it is a market that is just clearly lacking momentum, and we're not seeing a build-up, or we should say a more an obvious build-up either towards the upside or the downside. This is definitely a very neutral market. We are looking at a more longer-term downtrend over here, but this more elongated period of consolidation here has just pretty much set a tone for itself. And just looking at this price action over here, we wouldn't just look at this this downtrend way past into the early part of this year as an indication that that is where the price will potentially be looking to head as it breaks out of this wedge pattern formation over here. So we're pretty much open to a breakout either to the upside or the downside. And to be honest with you, just looking at how this market has been so weak, it really wouldn't surprise us to see that the market actually just continues to consolidate, move up and down, and even violate this entire wedge pattern formation over here and continue to consolidate going into the end of the year, because we're also keeping in mind the perception that going into the end of the year, volumes or trading volumes more specifically usually will go down, and the markets do enter into inactive trading periods where we do not see a lot of confident trading activity for the most part across majority of the markets. Of course, this market could be an exception, or it may not be an exception. It's just hard to tell looking at the price action and how the market's developing as of right now. Okay, so the next market we look at here is the gold commodity futures market, which in terms of price behavior actually has been, for some reason, behaving very similar to the euro currency futures market. Here too, we're seeing the market pretty much struggling for momentum and centered around a horizontal period of support and resistance. In the case of the market for gold, it's the 1215 level that runs right around here. Of course, we have the 1200 major round number running right around here, where the market actually rebounded off of very, very strongly the week prior to last one. But over the past week, we've actually seen the market find a lot of formidable support at the 1215-ish area. Of course, it is also a proven area of support and resistance. As you can see, we've had multiple indications where price found either decent support or resistance off the level, and so no surprise why this level here seems to be holding up. What is, however, a surprise to us is that even though price is most definitely finding decent support at the 1215 level itself, we're not seeing any major attempts from the bulls here to take price in their direction and further up north. Part of that reason could be the market's hesitance to break or even test the 1240-ish area, which is of course a more longer term area of support and resistance, and a more stronger one as well. And that could be one reason why we're not seeing a lot of buying come in the market just yet. But that's also the reason that is contributing to why the market here is potentially just consolidating for the most part, if you look at it in a more holistic fashion. We are, of course, seeing higher lows over here. We had a low over here, then we posted a major low over here, then there's another low just at the 1200 level. And so we're seeing these higher lows come in the market. Of course, there are higher highs as well. There was a major high post here, and there was a major high right around here. So this market could technically be identified as a bull market itself, but this momentum is definitely very unlike a typical strong, persistent uptrend where the bulls are just continuously taking price further up north, and we're only seeing non-threatening and periodic pullbacks into the uptrend. This is what we would classify as still a more range-bound market. And here too, like the euro currency futures market, we see that it is a market that is potentially also entering into a wedge pattern formation. If we can draw this rising support trend line, we have, of course, three very dominant touches on the trend line itself, and we do have a sort of a dropping resistance trend line over here that's currently containing price. As you can see, the market's pretty much opened at this period of resistance and this resistance trend line itself, and so that could be a potential indication that the market here could continue to wind up around the 1215-ish area that once again is running pretty much midway through this pattern itself, and could potentially be tightening up towards a breakout either towards the upside or the downside. Unlike the euro currency market, however, where we said that we wouldn't really be biased towards the breakout being in a particular direction. In this market, just looking at how we had the bears stay dominant pretty much through the bulk of this year, and this entire period of trading activity, where we typically define this as an uptrend, but we're not identifying this as a strong uptrend. We see this as a sluggish pullback into this downtrend itself, and so a continuation of this downtrend here, by virtue of a breakout out of this wedge pattern formation over here, wouldn't really surprise us at all, and would actually be something that we would be more inclined towards seeing versus the market actually breaking towards the upside and basically taking off towards the north. And the reason for that is that, once again, just looking at how the market has been hesitant to even test the 1240 level since rebounding off of it not too long ago, even a break towards the upside here wouldn't really have a lot of space, we believe, to run towards the upside, because a break would straight away lead the market to want to test the 1240 level, and we see that the market really has been very hesitant to do that, despite finding decent support at the 1215 level that runs right around here. So just looking at all these developments over here, we see that a break towards the downside, maybe a quick pullback to the 1215 level off of the 1200 level right around here, and then a break at the 1200 level, maybe a quick retest of it, going forward, and then just a continuation of that move down, possibly towards the swing low level over here. That would be the ideal market action and price action development that we're looking forward for this market going into the end of the year. But of course, the market may behave very different to our own expectations, and especially a market as volatile and as indecisive as this one, it really wouldn't surprise us to see market developments totally contrary to our expectations here. Okay, so finally we look at the 10-year Treasury note futures market. For this market, we continue to see the 119 round number and horizontal area of support and resistance as perhaps the most critical and the most important one for where the market is right now and where current price level is. Last week we did see some really interesting developments where we saw the market actually not only close above the 119 level, but also find decent support off of it and continue further up north towards the end of last week. We did say, if you recall our analysis for this market from the prior week, we did say that going above the 119 level, we don't see much resistance coming in for this market up until the 120 level, which is of course a round number as well as an area of support and resistance. And noticeably, though, we did not see the market actually test the 120 level itself, and we're also looking at how the market actually opened with a gap to the downside over here and pretty much at the 119 level. So this is interesting development. We did believe that the market should find it pretty straightforward and easy to test the 120 level. But it did stop sort of just shy of the level, and we're now seeing the market open again at the 119 level. We would like to reiterate our previous statement that usually when the markets gap either up or down, there is a tendency for the market to try and fill in that gap as early as possible. And so the fact that the market actually opened lower here could be an interesting opportunity for buyers to come into this market, especially since how we're sitting at a very critical area of support, of proven support, I should say. Of course, the market did find formidable support at this level the week prior. So just going by that, this could actually be a good opportunity for buyers to now launch their trades into this market and take price further up north, maybe potentially all the way up to the 120 level, or even price levels higher above the 120 level. Of course, a lot will depend on the ability of the 119 level here to continue to provide formidable support. If, however, we see the market actually trickling down underneath the 119 level, that could be early indications and warning signs of how this momentum here that we saw over the last couple of weeks build up towards the upside here could potentially reverse on itself, and which again wouldn't be a surprise at all given how the market over the more recent months has just been trading in a sideways fashion and has been choppy and indecisive for the most part. So even though action like that wouldn't surprise us, we would be more inclined to see this market actually continue its way further up and at least test the 120 level to see if the buying at that point is strong enough to be able to break the 120 level over here, maybe potentially pull back to it and then just continue its way further up to potentially test all of these highs further up over here close to the 121 level.